Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransinc.com or give Parker a call at 800-657-4910. At Valley Transportation, our goal is to help you reach yours.
Moving higher in the 21st century. Hard-working people working hard for you and me. Higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you're looking for a great solution to help your salespeople sell more stuff and close big deals, check out all the great products that Arrow CRM has to offer at heyarrow.com. Also, Valley Transportation, with 33 years of hauling ag and construction equipment across the country. Valley Transportation, our goal is helping you reach yours. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and Chip is nice enough to come on and talk about what's going on in the markets, man. So, Chip, how you been?
Hey, well, I'm recovering, Casey. Yeah. I've been down on my back with COVID for about 10 days here, and finally got my voice back and feeling about 95%. So I'm glad to be focused on something other than the COVID virus.
Yeah, there's we could spend a whole podcast talking about that, but we won't. We'll stick to the market. So
no, we gotta stick to the markets here. We gotta stay on script.
Right on, man. All right, so this last couple of weeks here, December. December's usually a fairly quiet month. You know, the last report came out, no big stunner there. In typical report fashion, it was kind of a yawner. Not much information came out of that, but you take a look at the markets over the last two or 3 weeks actually, and there's been a tremendous amount of volatility where you're having, soybeans, for example, you might have 10, 12, 15-cent swings day over day, and you start looking at, they settle right back to where they started typically, but for the most part, you're seeing this large amount of volatility. I guess as you look at that, Chip, what do you think some of the driving factors in that right now?
Yeah. I think that you got still a lot of outside market volatility happening as well. And today, in fact, we're supposed to have this Federal Reserve meeting and learn a little bit more about how fast they're going to taper and the speed at which they're going to raise interest rates. And I think some of the, inflation data has indicated that it's continuing to come in hotter than expected, and that it's really kind of going to tip force the hand of the Federal Reserve. So I think the outside markets are part of this. And you hit the nail on the head. We've had some really erratic moves, especially in this bean market. You don't know one day or the other if it's going to be up 20 or down 20. Some of that is weather related as well. It's getting a little bit on the dry side in portions of southern Brazil, northern Argentina. Over the weekend, there were a few pop-up showers scattered in Argentina especially, that weren't really in the forecast. Nothing like a 2-inch, big drought buster or anything, but there were enough scattered rains around. It wasn't in the market, and it kind of hit the bean market early in the week. And then, we saw those beans recover, almost all of what they lost the previous day yesterday. So some of this is weather. We're very definitely in a weather market. La Nina is still very much in force in the southern hemisphere, and it's starting to dry out portions, some really good growing areas of that southern Brazil, northern Argentina growing area, and that's got the market's attention. So, as the forecast flip flops, we're used to this in the July August time frame here. It's just now our winter is here and it's getting colder. You wouldn't expect that we're in a weather market, and that's really kind of what we see ourselves in right now in the case of corn and beans. So, kind of got those competing, opposing forces. What's going to happen in the financial markets and interest rates and crude oil, the energy markets, and the dollar, and a lot of that's going to be driven by this Federal Reserve meeting this week. And then on the other hand, all this weather situation that's happening in South America. They, for the most part, I'd say 2/3 or more of Brazil looks to be in really good shape. But in a La Nina year, it seems to always be those southern areas of Brazil and more of an Argentina situation. And there's still some very productive, high-yielding areas that are, trending well below average precip over the last, say, 4 weeks. And now they're starting to maybe battle some heat as well. So, stay tuned, I guess, and expect some additional volatility here as you get into next week and the week following Christmas and New Year's. Volume typically shrinks, and if you throw in some additional weather uncertainty, you could really add to the volatility going into the holiday period here the next couple of weeks.
Yeah, it looks like it's shaping up that way. One of the, let's talk about wheat for a minute. So wheat is, it's had its bumps along the way here the last couple of weeks, but it's performed very well. You look at where it's at in the marketplace. Usually when corn and beans are down, 10 to 15, wheat's up 8 to 10. So there's a lot of upward mobility right there. It looks like in wheat, and you're seeing some stuff come out of China out of Russia right now, where they're talking about reducing their export quota, and you got things with a lot of news coming out of Russia, really, I guess, all around when it comes to wheat, whether it's the stuff they're doing with Egypt or this quota stuff they're talking about now, and you start looking at the export taxes and stuff they have on there keep going up. So I guess as you look at wheat right now, what are you paying attention to there, and what are some of the driving factors you're kind of watching as we head into this new year?
Yeah, wheat was kind of the first one, maybe the second one after soy oil, to have the kind of this extended bull run, and it was we pushed Chicago wheat futures almost to the door of $9. Kansas City wheat was strong. You had 10+ year highs in Minneapolis wheat, and you mentioned a lot of the stuff going on there, with obviously starting with the drought here in the northern plains and Canadian prairies, really hurting spring wheat production. Our wheat acreage was lower. Some of the world problems, and I think the market did a good job over the last, say, summer time frame into early winter of digesting that bullishness. And we've had a pretty healthy correction to the downside here. We're essentially $1 off the highs in Chicago wheat futures, but still in the big picture, still in a pretty large uptrend. We haven't really violated any of the major retracement levels, going clear back to summer. And so you could still argue that we're still in a longer-term uptrend, just, in a corrective phase of that. And this could easily play out, especially as you get into winter and spring, to see, how these other, northern hemisphere countries, the Black Sea area and Russia, how their crop's going to come out of winter. If you look at a weather forecast here of the Central Plains, I mean, man, it doesn't look like winter. It looks more like a summer pattern. Near record temperatures. They're going to have some high winds coming. Not the best conditions for wheat production in the plains, and so this just may be kind of the normal ebb and flow of the wheat market, where we're in a corrective phase right now, a buck off the highs. As long as recent lows, from earlier this week and late last week, can kind of hold in the wheat market, it's acceptable, this correction that we've seen, and potentially by late winter, you're back up retesting the highs, and that's going to depend a lot on some of the actions in Russia, how much they're going to export, how high their export taxes are going to go. There's actually been some talk here that Russia may actually clamp down a little more. They did some of those actions to try to curb food inflation and flour inflation domestically in Russia, and it hasn't helped a lot yet. Unfortunately, their domestic prices continue to go up. So there's talk that they may even clamp down harder as far as what they allow out of that country, and so it just it's a very dynamic situation we've got going. I think for the time being, the spotlight has turned over now to corn and beans, like we talked about before, because of the weather situation in South America and what that might mean to production in the southern hemisphere. I think the wheat and the corn market maybe are taking over center stage, or I should say the corn and the bean market, and the wheat market's taking more of a back seat right now until we get a little deeper, closer to spring to kind of see how things are going to progress out of winter, how much winter kill there's been, and what the production prospects look like in the northern hemisphere.
Yeah. All right, let's talk about soybean crush. So there's been just the last couple of months, just been a bunch of soybeans go through the crush process, and looks like November is going to be a record month. If everything comes out like they say, like they have predicted that soybean or November will be the 5th largest month of crush totals ever. So what's some of the driving factors behind the large amount of soybean crush that we see right now? Is it a feed related thing?
Yeah, well, I think it's a multifaceted. I think at the heart of it is profitability.
Mm-hmm.
You essentially have recently been right at record profitability for soy crushers, and the same can be said about ethanol margins as well. So yeah, we do have the monthly crush report out later this morning. You mentioned it's supposed to be up in the 182 million bushel figure for the previous month's monthly crush. I was thinking about this earlier, honestly. Our corn and bean markets are getting to be more and more tied to the energy markets. And, I think a lot of what's driving this is, soy oil from a biodiesel standpoint. So, yes, there's obviously some feed issue with that from, the meal standpoint. A large part of that here over the last year also has been the vegetable oil aspect of it, with all the drought situation and palm oil production problems in parts of Asia, canola, soy oil problems because of the drought in the northern plains and the Canadian prairies. And so soy oil led some of that. I think at the heart of it, though, we're really transitioning more and more to the energy side of the equation. We've got biodiesels. We've got a much bigger part of this, and it looks like that's at least for the short run, the next few years, the way this current administration wants things to push is towards that, the greener side of the equation. Let's put more biodiesel out there, more ethanol. There's talk about expanding this into, more diesel, the airline industry and the trucking industry. And I think that's just something that's, obviously going to be good additional demand for our corn and beans and continue to keep, that demand high. There's been so much focus on, is China going to buy? Is China going to buy? And that is an important part of it. But as we expand our domestic usage, through the crush, through biodiesel, through more ethanol, and that expansion is slow, but it's been happening. That's, really good, strong demand that we're going to, be able to kind of offset a little bit, maybe some of the exports that ebb and flow with, how big South America's crop is, and, whether China likes us this week or not, and whether they're patting us on the back, buying a little bit of our products here.
Yeah, that's good point there. Last but not least, let's talk about China. Okay, you can't do this podcast without talking about China for at least a little bit. So, China released a little blurb last night, or earlier this week anyway, talking about they're going to add a tariff on all pork imports in 2022. I guess what's your thoughts there? Is this obviously they keep having these reports out about their pork production is off the charts, but they're still buying hogs from us as fast as they can. Is this a Chinese ploy to drive down the price a little bit from the jump back in the market, or do you really believe that their pork production is back online at the level they need it to be at?
Yeah, that's a great question. And the way I always answer this, and I think that the path you have to take on stuff like this is you have to watch what they do, not what they say. I have no idea, and there's no one that does,
right,
what that means or what that might mean. It's just been so back and forth, and they're experts at manipulating markets, right? They have to, because they're not an open capitalistic economy. They're a controlled communist economy. And so they're, got their hands in 12 million different aspects trying to control things. I think the take home is, obviously they had their problems, a year and a half, 2 years ago with ASF. They've tried to fix that. Is it back to normal? I'm not sure. Are they going to fight that ongoing, in various degrees with their production kind of ebbing and flowing? It's likely. I think the one thing is they still haven't left our pork market. Now, they're not buying the massive, 20, 30,000 tons a week like we were used to, but they're still there almost every week. And I think the thing that hasn't been talked about is they've quietly become one of our biggest beef buyers as well. And they're there every single week in beef. It used to be, the talk was, we're going to open the market up to, China and U.S. beef. And it just took forever. And now we did that. And it's just like, it's almost like it's under the radar, but they've quietly 2,000, 3,000 tons every week, 4,000 tons in taking U.S. beef. And as that adds up over the big picture in many, many weeks, they've quietly become one of our biggest exporters, or I should say one of the biggest importers of U.S. beef. And I think it's going to stay that way on pork, too. I don't think it's going to be the massive amounts that we've seen. But so far, in spite of what they have said, they continue to be there in small amounts every week for U.S. pork. So, yeah, I'm sure that's what they would like. They want to be self-sufficient. They want to have to rely on the rest of the world to feed them. Because, if it's pretty well known, I think they like to, in their opinion, take back Taiwan and some of the other areas and islands of, the Pacific there. And their policies aren't very appealing to the rest of the world. But they have to rely so much to feed their citizens on the rest of the world. Sure, they're trying all they can to get self-sufficient in everything. Grains, proteins, you name it. I don't think they're there yet. I think they want to be. So I think that the answer to your question, a long answer to your question, is you got to watch what they do. If we go for 6, 8 weeks, 2.5 months, and they're not in our market for U.S. pork, then maybe they have done what they say. But if they struggle with high pork prices and they continue to buy U.S. pork, it's probably just talking. And so I think that in the case of China, you don't believe a word they say. Watch what they do, not what they say, and that will tell you the reality of what's going on the ground.
Right. Yeah, that's kind of a lesson learned here over this whole, ever since I've started this podcast, to be honest with you. They say one thing and they put it in the news and they're doing drastically the opposite of what they talk about. So yeah, it's definitely watch what they do, not what they say, for sure. So, well, Chip, I think that pretty well wraps it up here. What's the best way for folks to get a hold of you at Blue Reef Agri Marketing, talk about the plan they're working on, or just get some advice and some direction to get pointed in the right path down, to start going on the right path of building that plan?
Yeah, the best way is just call our office directly, and that number is 309-550-7213, and we'd love to chat with you about what your plan is and how we might be able to help improve that plan, and more importantly, help you execute at the right time on that risk management plan.
Absolutely. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. Also, go to MovingIronLLC.com for all information related to the Moving Iron Podcast. Got a big announcement coming out for the Moving Iron Summit. Going to be announcing dates and venues for that here probably this week sometime. So pay attention to that. So, Chip, appreciate you being on the podcast, man.
You bet. Thanks for having me, and keep the seatbelts buckled firmly, because it's going to be an interesting ride here still for the next several weeks.
That is a very true statement. So with that, I'm Casey Seymour, Chip Nellinger. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to AxonTire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransinc.com or give Parker a call at 800-657-4910. At Valley Transportation, our goal is to help you reach yours.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.